Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Friday, October 30th, 2020. There's a lot of economic data, information that's moving markets, and markets are moving, so let's get right to it. Thanks for watching. Well, let's talk about it. Headlines are negative right now, and that's to be expected. We have the third quarter earnings coming out, some of the big tech right now reporting. Earnings are phenomenal, actually substantial on the upside for them. But there's removing guidance, okay? So as they remove guidance, that creates further uncertainty going forward. So there's a rotation being built in. So it's a positioning flush versus a growth faltering a take that we have here at Blanke Schein Wealth Management. And the reasons underlying that would be, we're watching the 10-year Treasury. That's 83 basis points. It's been solid over the last couple of weeks, even though the markets have pulled back. We're watching, and earnings have been solidly out surprised on the upside on majority. So earnings are actually solid, all things considered, in the third quarter. Let's talk about the third quarter GDP coming in at 33.1% yesterday. Didn't get an opportunity to report on it. I want to speak to it at this moment in time. That's without state of California. I'm in San Francisco right now. We're second story here in the gardens at the Fairmont, and the city is in the least lockdown of California, relatively speaking, and it's slowing, sort of coming from a slow growth crawl, if you will, from a standstill, everyone shelter in place. And then the city itself is moving very, very, very slowly and cautiously, as it should, because this was the epicenter, if you will, early on in the coronavirus. That being said, everyone is working remotely. So technology has been reporting big numbers and everyone's working remotely. There are people out here, but this state was shut down for the longest time, for the most part. This is the 5th largest economy in the world. So that number wasn't in the 33.1% growth rate of the GDP. And let me just put the GDP number in perspective for you. When we first started the year, so coming off the fourth quarter of 2019, if you will, the annualized GDP number for the US economy was $19.2 trillion, okay? Going right before the coronavirus, so just, about 19.2 trillion, okay? Right now, we just had a GDP that reports an annualized growth rate of $18.5 trillion. So about 5 to 700 million or billion off of that number. Well, keep in mind, we had monetary and fiscal policy just add in a combined total $7 trillion worth of support, stabilization, and stimulus to the economy. And we have Congress post-election going to get back and add an additional $2 trillion to make up for the $700 billion that we're missing right now out of the third quarter. And California was shut down this entire time. You couldn't do business or commerce within California. So add back in California's numbers simply because they should be. They weren't even in that number. We are actually had a strong economy coming into this, and we're showing that we're proving that the US economy is resilient and it's a strong economy coming out of coronavirus. Now, we have had recent headlines in Europe as well as in the United States that the coronavirus is still with us, yes. But one thing is for certain, with the advent of technology pulling through and the adoption of everyone learning to use technology, it's proving that not only the US economy is resilient, but we're learning to live with the virus, right? Viruses, correct me if I'm wrong, but viruses are with us for forever, right? They don't go away. I understand that we're gonna get a vaccine, that's possible, but it doesn't seem like it's gonna happen like overnight, if we're being realistic and honest with ourselves. So what happens? We adapt as US sort of Americans here, and as a US consumer learns different ways to consume and spend, and businesses pivot and shift to meet that demand and create that balance between supply and demand and keep commerce going. One thing that the third quarter GDP did show is that how adaptable and adjustable both the consumer being resilient and US businesses being able to capture and pivot within one quarter, maybe even 2 periods of time, to keep the US economy on track. So we do have a bounce back, and then underlying that, what we're paying attention to are the 10-year Treasury. It's very stable. The credit spreads, very intact. So we look at the 2s and 10s credit spreads. We also look at the high yield. Those haven't moved very much at all. So that means that the short-term sell-off that we're seeing right now is not going to persist into something larger. We're also paying attention to the S&P 500. 3,200 on the S&P 500 right now is sort of the touch point of bottom line resistance. We saw S&P futures hit that this morning, and they bounced even though we have a negative trading day, last day of October. generally traditionally is. And then next week we have complete uncertainty. Will we have an election outcome winner by Tuesday night next week? Probably not. I think this could go on for a couple of weeks, and that's sort of the angst and anxiety. But the trend going into the election, if you had the 1 month, 3 month, and 6 month trend positive, which they have been, the following 1 month, 3 month, 6 month, 12 months trends, historically speaking, have been positive. So that's the most important thing. We want to watch the trend as our friend, and that is a positive. So all sample sets, as we back test that and we look historically speaking, it basically just means we had a strong economy starting off, we have a strong economy moving forward, regardless of however the outcome next Tuesday or then beyond would be. So there's a couple of things underneath that we're seeing: key positioning, rotation within, consumer discretionary still seems to outperform. That's very important because that's all the stuff you don't need and the people are still spending money on it, and those stocks are outperforming even when the equity market is down or stock market is down. So we here at Blanke Schein Wealth Management, in short, we love these opportunities when markets sell off, because that means everything's on sale for high quality, well-run growth opportunities and businesses that we can add into portfolios for future returns, as we believe that, going forward, these are those opportunities in time where we take advantage of them on a go-forward basis. So when headlines are negative, there's a lot of gloom and doom, we look to the facts and the fundamentals that indicate for us whether is this something to be concerned about on a short and long-term basis. Right now, we actually have a lot of good things we could point to that maybe the headlines might not, as well as all this uncertainty obviously is swirling around the world. So thank you for watching. Have a great weekend. Happy Halloween. Stay healthy and safe. And you guys take care. We'll catch up first thing Monday morning. We'll be back in the office for you. And I bet you we have, especially after this weekend, a lot to talk about. So take care. Have a great day.